Leanne, thanks so much for joining us today on a day which is full of sort of production results out of these miners. We've got Atlas Iron out a little earlier as well. Took a bit of a hit despite lifting production and cutting costs in terms of the share price anyway.
Absolutely, Ingrid. If we have a look at that share price, down about 4% when I last looked. We did see it recovering somewhat after that China data, but unfortunately still coming under a bit of pressure. If we have a look at that report, some of those numbers actually didn't look too bad. Their iron ore shipments were up about 23% for the quarter, and of course up about 35% for the half year. Their all-in costs had actually reduced by about 4% over the December quarter, and of course we also saw some pretty positive cash flows coming through of about $13.7 million, and that obviously allowed them to maintain a pretty robust cash balance of about $169 million. In addition to that, they actually maintained their FY15 guidance as well, saying that they are still on track in terms of some of that cost reduction, targeting up to $100 million. Certainly seeing a lot of those costs trending lower, and they are actually targeting the lower end of their cost range of about 64 to 68 US dollars a tonne. And of course, they've also said they're reducing their capex by about $25 million. So a lot of that actually looked fairly positive, and particularly in terms of the company increasing that production and continuing to focus on reducing those costs. But I do think that it really hasn't been enough. Those costs do still remain very high. They did confirm, obviously, that their selling price for that iron ore, those realised prices, were down 12%. That was at $63 a tonne. And of course, looking at those costs coming in at $66 a tonne, it does look like they are loss-making. So those costs are higher than those realised prices. And I do think that certainly remains one of our key concerns going forward. So I think the outlook for the stock certainly still does remain very cautious. Obviously, over 2014, it came under significant pressure. It was down 86%, although we have actually seen it picking up in 2015. It's up about 12%. I think off the back of potential expectations about a bit of a stabilisation in that iron ore price. But I certainly think in terms of the fact that it is the highest cost producer, obviously highly leveraged to any further weakness in that iron ore price, I think certainly still remains very cautious, and obviously seeing investors still reacting to that today.
On the flip side today, GUD doing particularly well, surging ahead. It's up about 6.6% right now after its half-year results. What did you make of the numbers?
Ingrid, if we have a look at the numbers against our expectations, it actually basically was in line. So there really were no surprises. Those underlying net profits up 16%. That was about 3% ahead of our forecast. Their underlying earnings also up about 16%. This was about 1% ahead of our forecast. And of course, looking at that interim dividend coming in at 20 cents, this was basically exactly in line with our forecast. So really no surprises out of that result. If we have a look at some of the key takeouts, we are continuing to see that automotive division really underpinning strength in their earnings. That area actually contributed about 51% to their earnings. If we have a look at Dexian's profitability, this really benefited from the closure of that Kings Park, despite actually seeing some of their sales relatively flat as a result of some project delays. And finally, looking at Sunbeam, we are actually seeing their top-line performance remaining a little bit challenged. We did actually see their revenues down about 7.3% or so. But on the positive side of things, looking at their FY15 guidance, they have said they are on track to lift their full-year earnings by up to 22%, and profit improvement certainly does remain on track. So I think that actually looks very positive, and one of the reasons why we are seeing a positive reaction in that share price today. If we have a look at the outlook, on the positive side of things, obviously they have that very attractive dividend, but I think a turnaround in that Sunbeam area is probably still some time away. Probably the earliest around FY16 or so. Obviously that lower Aussie dollar also potentially having an impact in terms of their margins, and also some of those competitive pressures coming in for Dexian in terms of some of those Chinese imports, which certainly are rising. So I think netting that out, we probably do remain a bit of a hold on this stock at this stage, but nonetheless, obviously that report that's come through today did actually look very strong, in line with expectations, and seeing a positive performance.
All right, Leanne, just looking at the broader market as well, we obviously clawed back some of our losses when that China data was released, but we're still down about 0.1%. What do you make of it?
Ingrid, that's right. Obviously, this morning, I think we certainly were continuing to see caution from investors. I think ahead of that China data, particularly after we saw, obviously, those Chinese equities and share markets yesterday really taking a tumble. Obviously, we didn't have any lead coming from the US, although we did see European share markets continuing to perform strongly ahead of further expectations about that ECB meeting on Thursday. But I really think the big focus today has been around that China data, and I think that caution this morning was reflecting that data. But as you say, when it did come through, it actually looks like it has beaten on expectations, and we did see an uptick in the market at that point. And as you said earlier, that materials space as well, it was actually one of the worst performers initially, but we have seen it picking up somewhat. Still seeing some of those iron ore players, the likes of BC Iron and obviously Atlas Iron, the worst performers. We saw iron ore off about 0.8% overnight, although on the flip side, still seeing some of those copper and gold stocks performing quite strongly. That energy space obviously still taking a hit following those oil prices remaining at low levels. Looking at the best performer though being the financial sector, seeing all of the major banks performing strongly, and of course Macquarie Group really leading the way after its profit upgrade yesterday. So it will certainly be interesting to see whether we can maintain some of this momentum following that positive China data, but unfortunately still seeing it under a little bit of pressure and a bit of a risk-off sentiment once again.
Yeah, market's just down 5 points right now. Leanne Jones, thanks so much.
Thanks, Ingrid.